Well, good evening, ladies and gentlemen. Welcome to this final webinar for 2014. Lovely to have you here, and Christmas greetings to all of you. Happy Christmas, Merry New Year, prosperous New Year, more importantly, I guess. Happy Hanukkah to our Jewish friends who are, as usual, a bit in front of us. Their celebration, I think, started on the 17th. The Festival of Light, so I hope you're all ready for the festive season at the end of a long and pretty busy year. So it's great to see you all here, David. Nice to see you here. I'm going to explain the hook trade for you, mate, so hang around. All our other old friends are here. I love these webinars. I love seeing the names of all of you. I know so many of you so well, and the others, I feel I'm getting to know you pretty well. There's my mate Pete from New Zealand, and another Pete. And Marcel, my friend, it must be pretty cold where you are up in Toronto. Of course, it's actually good morning to our friends in the Southern Hemisphere, Australia and New Zealand. And it's Christmas Eve here because we're 10 hours ahead. So it's December the 24th at 11:30 in the morning. It's a beautiful hot day. It's midsummer down here, of course, about 30 degrees, low 90s, mid-90s on the Gold Coast, and the Pacific Ocean is very blue, and lovely waves there, and just couldn't be more picturesque. And there's Shift. Hello, old mate. Happy Christmas, and great New Year to you. I guess you'll be heading up the coast fairly shortly if you're not there already. Anyway, folks, lots to tell you about today. We're going to run through our usual PowerPoint presentation, and then we're going to look at some charts, our long-term charts, and see where the markets are going to go next year, and look for the best of the trading opportunities there as usual. And after that, I'm going to show you your Christmas present. So it'll be a delayed Christmas present. You can sort of think of it like the New Year sales, but we've got a pretty big deal that's going to excite you, which I'm going to talk to you about it today and show you a lot about it. And it's going to be available to all of you early in the new year. And I think it will change your lives. I think 2015 will, for many of you, be the first opportunity that you have to really maximize trading, minimize the effort, and I'll show you all of that a little later. So don't go away. The best part of the party is coming last, but there's still some amazing stuff to see right here and now. So let's get rolling. As you know, those of you who are new to us, markets are rational, orderly, sometimes predictable, and the Danielcode is a set of proprietary ratios that control time and price. We're very big on time with our trading setups, which is a marked difference to many other types of trading programs. We're primarily sort of 1 to 8 day traders in futures and Forex. We trade almost everything you can think of, and with our new product, which I'm going to talk to you about later, we got a whole lot of other markets that you haven't been exposed to before, but offer great opportunities. When you're watching media these days, whether it's cable or whether you're reading the websites, excuse me, we've seen this great difference between what used to be news reporting and what is today really commentary. And one of the websites that I enjoy very much, I know a few of you read it too, is Zero Hedge, and a very, very clever guy who runs it, and they do some amazing stuff with some of the stuff they report. But all of these commentators, no matter where you get your sort of jollies from reading financial news, all of these commentators have a bias. They have inherent beliefs themselves. Some of it is genuinely held. Others, I suspect, are done for a commercial purpose. And Zero Hedge has had the view ever since they started, which I guess is 3 or maybe 4 years ago, that markets are overbought, the crash is inevitable, equities are just a sham, and don't follow the fundamentals, whatever they think the fundamentals are. Of course, they're not traders. They don't actually know how to trade, nor do the very celebrated commentators who write for them. But they've got this bias that equity markets are a complete sham, should be crashing, and should have crashed long ago. And that gold, they're great gold bugs. There's always a big story on gold. And of course they've developed the perfect defense mechanism, because they don't really understand why gold does what it does. The gold bugs have come up with this theory that the markets are rigged, and they're rigged by the big bullion banks and the big prop traders, and there's all sorts of interesting, I'm sure very nice people who keep saying they prove markets are rigged, they prove markets are rigged. Well, they may be. It makes no difference to us. If you know how to trade, you're on the right side of the trade and you make money. So I urge you to really note the difference between commentary, which is written by well-meaning people, but who don't know anything about trading, and the real business of trading to make money, which is the business we're in. And I had a bit of a laugh yesterday with Zero Hedge's comments on the rally in the US equities, which of course is the traditional Santa rally. For those of you who don't know, there's a very strong bias upwards in equities around the Christmas period, and normal conditions we would expect that upward bias. I think it's done the heavy part of its lifting now, but it will continue until the new year with a sideways to upward bias. But here's the Santa rally, and the point I want to make to you is their comment about this is on the S&P, and what they said is this is the biggest 4-day surge in over 3 years. Who could have seen that coming? Well, the answer simply is we did. As those of you know who come and get their signals from the Danielcode every day, we had blue line and TO3 buy signals for the S&P, the Dow, the NASDAQ, the Russell, and we didn't put them up for the Australian SPY because it was on rollover, but it pretty much follows the S&P anyway, if you're in doubt. So one of the things about trading is occasionally we get these sort of monster trades, and it's essential that you get those trades, because they're the ones that just put the cream on top of your dressing on top of your salad for the night, and a few more days. And when they come, they're very valuable, and they are must get. If you didn't get these trades, the problem's yours, because competent traders were pretty well aware. You can see the setup here with that bar down that has the blue line buy signal, yum, pointing to it. Absolutely was stopped like a train at the 1962.25 target, the blue line target from the Danielcode proprietary numbers, which is why we call these blue line trades. And I've been urging you for months and months in every webinar that I've done for the last 3 or 4 months or even more. I've been telling you that these blue line trades are the ones that you want to try and hold longer. And I've explained to you how you hold them. But there's a nice little vision of it, that you had your blue line buy signal. If you took that, then you're $3,412 the richer. And of course, that's just based on one contract, one mini contract, in fact, which is how we score all of our trading. And the next comment they added was that commodities collapse led by silver and crude. They actually missed gold, which followed silver. It's actually a better trade than silver. And they used the comment rigged. I don't know how these things are rigged, because if you look at this chart that I'm showing you, you can see that every turn in this market happens at a Danielcode price and time level, and that I won't say we never miss a trade in the market, but by golly, we miss very few. And you can see from this chart of gold, starting up from the plus sell signal, if you followed that down, and there was good reason to do that. A lot of these plus signals are actually forms of blue line signals you had here. I'll just explain that a little bit further to you with my highlighter. spotlight, I think they call it. You can see here this big bar up full of momentum. It just stopped a few ticks away from the Danielcode blue line, which was on all of your charts, or should have been, at 1240.6. Then you had an inside bar, and then the next day I issued the plus sell signal, which was elected either under the inside bar or below the last bar that's not itself an inside bar. If you don't understand that, do have a look back at the previous webinars. We've talked about that in the last few months. You had a nice rundown to get stopped out on a one bar, and your trailing stop didn't kick in, but we had a buy signal for this bar that rallied back up here. You made 2,130 on the short trade. You were long on this one bar here, and then you had another plus sell signal 2 days later, which either if you sold underneath the last bar that was not itself an inside bar, you got another 1,240. If you were more aggressive and sold under the inside bar, you got 1,790, and you lost $1,000 on the rally bar that failed. So there's a pretty easy 3.5, say $2,500 to $3,500, depending on how you traded it. So the point I want to make is markets are always rigged to those who don't know, and the reality is you will be absolutely amazed how few people in the trading world really know about trading. A lot of them claim to. A lot of it's economic mumbo-jumbo, where they seek to impute trading patterns from economic news, and they're all hopeless failures at that. And I don't mean that in a disparaging manner, but the reality is that if you're trying to trade from economic data, the thing that's missing, the big key word, is when. It doesn't actually tell you when it's likely to be triggered. So this is the trade that Zero Hedge and its supporters thought was an absolute fake. Couldn't have happened because the market had to be rigged. We had the plus sell signal up 2 hours after the previous day's trading, so it was fairly obvious to us. Just showing you here, this is actually a chart from last year's Christmas webinar. I haven't changed it. I just wanted to remind all of you that you should be putting trading channels on your chart. You can put them on, this happens to be a 6-day chart. You can put them on daily charts if you wish. They're very, very good. The 6 days actually the best, and this should be the first thing you put on your chart. If you don't know how to do it, there's a webinar at the Danielcode website called Trading Channels, and there's a whole webinar on how you construct them and what they mean. But the extraordinary thing is, once you get these, the technique of drawing these Danielcode trading channels, you can see that markets just vacillate inside them, and they provide very, very precise support and resistance for financial markets. This one ends in October 2013, which was the last chart that I had for last year's Christmas webinar, but you will very shortly see the updated version where it's continued to run inside those channels exactly right up to the present day. What you're seeing now is our Danielcode trade program, which I'm showing for the benefit of those of you that are not already Danielcode members. And this is how our trades are displayed every day. We have some recommended trades. They're all computer generated, and they show you what the market is that we recommend a trade in, whether it's a sell or a buy. We give you the exact entry. We tell you exactly where the stop goes. We have a very modest first target if you're trading that type of signal. We tell you whether these trades are correlated or not, which means that if you have a look, for example, at these trades over here, they both Aussie JPY, Euro JPY, they both got JPY in them. So they're correlated, and the program knows about market correlations, and it will cut down the number of recommended contracts to adjust for that correlation, because where you have highly correlated markets, to some extent you're trading the same market, so you need to manage your risk accordingly. And This is an interactive program within the Danielcode website, and you just type in here the number of contracts that you want to take, and there's a button underneath that says recalculate, and it will do that instantly and tell you what your total risk is on each of your positions, which is an easy way of managing your risk management. Here's a couple more of this week's trades. Here's the Russell. Same thing. Who would have thought this would have gone up? Well, an absolute standard setup for us. Here's the market coming down on hitting the Danielcode blue line, 1129.1. It just briefly pierced it, ran away a little bit. Stochastic was oversold. So was the short-term stochastic. We had big divergence on the momentum, and that set up the blue line signal, which you got on this day, the day before it turned. These signals are valid for 1, 2, or 3 days, depending on the type of signal, and very often we have these signals out to you a day or two before the turn happens, which is very different to most everyone else. And here we are. If you bought this at the high of this bar where the highlighter is, which is where you should be entering that high, that's the true high plus 2 ticks. You made not quite $5,000 per one contract on the Russell. This is the same thing. This is Germany's DAX. It's a much bigger index that I trade a lot because it is a big index. It's just as predictable, if you know what you're doing, as the other markets, and you can see exactly the same thing here. Key reversal bar to just confirm the blue line signal. We didn't need that because we created the signal the day before, and whoosh, off it went. So 8,287 per one contract into today's close. Here's the DX. So I assume those of you who've been trading equities, and you all should be, are all feeling happy about the state of your wallets for Christmas, and now just watch your wives and girlfriends and children empty it, which is what usually happens. DX, this is the US dollar index. I want to show you this to get you thinking a bit. This is actually a plus signal, but not many of you have the plus signals. The majority of you, I know, happy just to handle the TO3 signals. And I want to highlight to you how with the plus signals you get a lot more trades and you can make a lot more money, and we're going to talk more about that in our next webinar in the new year. This is to show you exactly the same things happen on currencies. You folks, I know a lot of you currency traders, have a look at this, exactly the same thing. This is the CAD Chief, Canadian dollar, Swiss franc cross, called the Chief for some reason. Same thing, blue line signal. Look at the setup, absolutely perfectly down into the Danielcode blue line on your charts. Stochastic's oversold, the fast stochastic was oversold. Big divergence on our proprietary momentum indicator, which all of you should have in the Danielcode library. If you are a member, Terry will enable that for you. It's free to all members, and that will enable you to see these, start seeing these trades for yourself. And whoosh, off it goes, $2,000 per one contract into today's close. Very nice. Same thing. This is a different one I want to show you. This is another one of those plus signals I want to get you thinking about. This is Euro GBP. And what we had there is we had a market that was range trading. That's why it's trading in amongst these red bars, which are our range retracement bars. But you can see with this bar here, where I now have the highlighter, how that bar stopped exactly, almost just a few ticks from the Danielcode proprietary retracement number. Now, these numbers are, apart from members, secret. Nobody else has ever understood that markets are ruled by the Danielcode ratios, and they're very different to Fibonacci's and anything else you've ever heard of, all of which are just rubbish. You saw their target recognition, and happened not once but twice. This bar hit that same price level, had a heart attack, turned around, did a key reversal bar, rallied back up here, and it closed right on that 79.54 Danielcode retracement. That told us that this market was tracking the Danielcode retracement numbers, and we didn't have an oversold, an overbought fast stochastic, but not far away. We also didn't have an overbought slow stochastic, but same thing not far away. But look what's happened with our momentum indicator. This is our proprietary momentum indicator. The market made a higher high, and the momentum indicator did not, and that's called divergent, and that's the last thing we look for to confirm that we have a trade on our hands. So as soon as this bar was finished, you had a plus sell signal posted in here. The way those stochastics were, those of you who are been trading longer, more confident in your trading, you could have let that trade run with a 2-bar trailing stop, and that becomes a 1-bar trailing stop when the stochastic gets oversold, which is down here. So you were stopped out just at this little high here, and you made $1,100 on that trade. And that's how easy it is. We try to do as much for you as we can. Our aim obviously is for you to become great traders and to do very well, because the better you're trading, the longer you'll stay with us, which of course is good for you and good for us. David nudged and asked me about the Danielcode hook trade. This is something like a lot of other things that I usually will teach you at tutorials, but if you are able to see this happening now and again, it's a very, very valuable source of earnings. And what happens with these trades, this is how it works. You get, first of all, a Danielcode trade signal. This chart is coffee, and this was a GMatch Pro sell signal. You guys who don't subscribe to GMatch Pro wouldn't have seen it, but Marcel, I know you saw it, and lots of other GMatch people would have seen this as a GMatch sell. It was also a Fractalian sell, which is another system I also teach a tutorial. So there was the sell, and down it went. Sells executed the low of this bar. Looked all right the first day, didn't look much good the second day because you got a little key reversal bar, and it's going to rally. Now this is what constitutes a hook trade. First of all, that you have a Danielcode signal of some sort, either a GMAG or a Genie or a Fractalian, any of the approved Danielcode signals. That's the first thing you need. You then need the counter trend rally, which is this bar up here. Okay, and this is this 1 to 3 Brian for you and your language. This is the 1 to 3 bar counter trend. This is the only part of Elliott wave theory that is true, which is the 1-2. The rest of it is fantasy, but this is something we see all the time. The rally back up after a turning point, and you do need know how to trade it. Well, your failure point is above this bar, which is the setup bar, and the high of that bar was 201.35, so 2 ticks for our buffer takes our stop loss to 201.45, and that's where our stop is. We get this 1-bar rally up, and the nature of a hook, a Danielcode hook, is this rally will go exactly, and I mean exactly precise, within 2 or 3 ticks to one of these 3 numbers. The first number is the 74% retracement. The next number is the 89% retracement, and those are the 2 numbers that usually stop a hook. And the swing is from this low here to this high here. And these are the 2 numbers that nearly always stop a hook. Sometimes it will go past it. This is 114.8% of the swing up here, which is a minor Danielcode number. Markets will sometimes stick their heads through this resistance. Very unusual. When they do, they hardly ever close above it, because if they did close above it, that would invalidate the short trade for us. But as long as that area is not breached on a closing basis, we're still looking for the short trade. So there's the hook set up. We've had our Danielcode signal. We've got our rally. We've got precise target recognition of one of the Danielcode retracement numbers, and that's what the hook trade is, and you sell it. So you sell it, you're short anyway, but if you were short, sell more. These hook trades, when they happen, are really valuable setups. So you're short at the low of that bar the next day. Doesn't look very nice because it takes out your trade, fills you short, and spends the rest of the day rallying. And you grumble about that, but you know, you've got to look at these things a little longer than just day to day, and off it goes. So it runs all the way down here. Your 2-bar trailing stop didn't get triggered here because we aren't oversold, but right in this bar here, we're certainly oversold. So we moved from a 2-bar trailing stop to a 1 bar trailing stop, which means the stop loss for this trade goes above the high of the last completed bar, plus 2 ticks, and that's where you stopped out. Excuse me, right there. So you've made $4,800 per one contract, together with whatever you made on the initial run down. And if you bought this bar, you had a loss on that counter bar trade, but we see that all the time, and I continue to tell you, don't worry about it. Trade exactly what's in front of you the way I teach you, and the market will, after it's managed to mess up everyone else, it will certainly reward you, which it's done all the way down here. So, David, that's for you. You wanted to know what a Danielcode hook trade was, and I see that you approve of my explanation there. So that's great. Okay, folks, anything that you are interested in at the Danielcode, we do encourage you to ask Terry for a free trial. You just contact Terry at support@thedanielcode.com, or you can find his Skype at www.thedanielcode.com under contacts. Talk to Terry, ask him for a free trial, or you can just switch it on yourself. You click on the free trial button, follow the prompts, and Terry will give you a free trial of everything. You get the fourth seal, the blue lines, the TO3s, the plus, everything else, anything else you want on there. You get a free trial of everything. We have a simple view of marketing. We don't do any, but we do think the best way is to offer you people the opportunity to try this stuff yourself and see if it suits you. I have people who have some of our programs who think they're the most marvelous thing ever invented, and whilst I concur with that, I also have to tell you that we also have people who can't trade those programs or who find them unsuitable. They're either too fast, too slow, or too uncomfortable. So the simple answer is you try it and see, and make up your own mind whether it's what you're looking for, and you're most welcome to do that. Here's our compliance statement, which I'm very keen for you to always be aware of, that there is risk in trading. There is more risk if you don't know what you're doing, and there's still more risk if you're listening to someone else other than me. But there you are. Be aware there's no reward without risk, and risk and reward are both concepts of trading. Dave, no, I haven't done crude yet. I'll get to that shortly. So here's our last slide for the day, folks, and Mrs. Need and my children. Terry and his rapidly growing family. He seems to have a new son. It seems like every month. I'm sure it isn't, but they had a great expansion this year, and all of these people join me in wishing you a very Merry Christmas and a prosperous New Year. And I found for your entertainment this rather unusual Christmas card which some kind person has made, and it shows Santa on a moonlight night trudging along with his sleigh in his furs. He's obviously a Northern Hemisphere Santa. He's not down here with us, shift where we've probably got board shorts on. And he's trudging off home. He's got a mama bear to help him, and on the sleigh he's got a baby bear and a little fox and a cute little rabbit running alongside, and it's a Christmas tree. And he's taking them all to his house, no doubt, for a hot meal and sit by the fire and a toddy of something interesting. Whatever it is that bears and foxes like is a toddy. And I'm a great believer in Santa Claus, and I used to have tremendous trouble. I'll actually be meeting Santa in about 10 hours. I used to have tremendous trouble convincing my children that Santa was real when they were very, very little babies. They were terribly skeptical, which might tell you something about the breeding. And I used to tell them that Santa would land his sleigh on our tennis court, and each Christmas Eve I'd go and take down the net so Santa could land his sleigh there with the reindeers, and I'd go around the paddock and pick up some dried horse droppings and put them on the tennis court to show that the reindeer had been there. And Santa would always come and have a cup of tea with me, and we'd have a teapot and a cup of tea and a piece of Christmas cake and some pepperkaka biscuits, for any of you who know what they are. They're a ginger-based Swedish delicacy, very nice. My wife and daughter both make them very nicely. And by morning I'd have had to have had my cup of tea with Santa, and the tea would be gone and there'd be bite marks in the pepper kaka. And you wouldn't believe it. My children are both almost grown up now. My daughter's just finished her honours degree for psychology excuse me, at Bond University, and starts as a tutor teaching fellow there next year. My son John's in the middle of his architecture course. So they're reasonably grown up young people, but they still insist on having the our rituals around Christmas. So we still have a Christmas tree and presents underneath it, and Dad's got to go through the performance of having a cup of tea with Santa later tonight. So anyway, I believe in Santa, and I hope you all do as well. That's the end of our slideshow presentation, folks. We're now going to excuse me, we're now going to move on to our what happens if you smoke too much? We're now going to move on to look at our charts, the important business, and we're going to run through today S&P, gold, oil, DX, and the Aussie US dollar chart. Let's have a look here. Richard, here's the S&P chart you were looking for. Shift, I'd like to know Santa's current location. You've been a good boy this year. I know you've been a very good boy this year, mate. You've got testimonials about it. Santa now, I guess he's sort of over Darwin, isn't he? If he's it's daylight up there, it'll have to be somewhere further, much further east, where he just follows the dark shadow of the change of light over, but about the latitude of Darwin, and probably a couple of thousand miles to the east of Darwin's where he would be now. But I'll be getting a signal soon, and I'm going to, after this webinar, because it is Christmas Eve down here, my friend, I'm going to go and buy the prawns and the oysters. We don't have hot meals and turkeys down here, or my family doesn't anyway. It's just all too hot. We did when we were in New Zealand, but for this year, it's prawns, oysters, bugs, and some ham salad. It's going to be 32 degrees up here tomorrow. Glorious day. All right, so here's the first of the S&P charts we want to show you. This is the big chart, the long-term trend chart. This is the 24-day chart. And you can see on there, amongst other things, a couple of red lines. These are the Danielcode 4-seal forecasting line. So this one's been breached here, so that can come off, and it's now just running up this other S&P red line up here. It's following it up beautifully. Though some of you will remember that back in February or March, very early in the year, I told you that if the S&P continued inside its Danielcode trading channel, it would be at 2100 by Christmas. Well, it closed today. This is the index at 2082. The future's a bit higher than that, so we're only about less than 20 points away. It closed was 28.2. We're 18 points away from our 2100 target. And those of you who followed that would remember also that Goldman Sachs came out 10 days later and said our target for the end of the year S&P is 2100, and we all fell over laughing. It's lovely. It's flattery. Imitation is flattery. But anyway, it looks like we're going to be spot on with that now. Don't get excited. That doesn't mean the market's going to turn there or anything else. At the moment, we make those decisions from an entirely different analysis, but that was our published target to you folks in right back, I think maybe February, March. I said that. We've talked about it since, and it's just going to be absolutely spot on. And that's how powerful these Danielcode trade channels are, that if they're properly drawn, they will contain the market. You can see this one here has contained the market. It started in March 2009 at the crash low, and it's just followed this. Here it is. Here's a hit on the first one standard deviation to the high, flirtation with it again, correction down to 2 standard deviations from the mean. First blue line is 1, second one is 2 standard deviations, and off it's gone, back up to the mean, attacked the mean, through the mean, got to 1 standard deviation above the mean there, There's the correction that we got that the cocked hat article talked about. And on this chart, it doesn't look very impressive, but it was a nice correction. The main thing was we knew about it beforehand and told you about it, which is important. Okay, so there's our 24-day chart. We always start with the longest term chart and move back from there. And this is the 12-day chart. Nothing really new for you to see on this, except again you can just look at this trading channel and see how magnificently it's controlled this market. I mean, anyone who thinks markets are random just doesn't know anything about trading, and it's just been flirting with the upper one standard deviation. Here again, this is another market. It's trapped completely by that Danielcode fourth seal red line. Let's move to the 6-day one, and this is actually the futures. So the futures closed today at 2,078 on its way to 2,100 or more, and as you can see, exactly the same thing. Different time frame, but again completely controlled by the Danielcode trading channel. So you really should spend some time and learn how to draw these channels. There's a video on it with nothing else on. Thanks, Eleanor. I think I fixed that. Everything runs according to these Danielcode trade channels, and the more you practice, the better you'll be at it, like most things in life. So S&P's onward and upwards. Remember, there's a very strong sideways to up bias through Christmas and the holiday period, and this market will probably gently continue to wend its way higher until at least the new year. Remember, folks, for those of you who are trading over the holidays, there will be very reduced liquidity. So if you're going to trade, trade light. Better advice is switch off your computers, spend the time with your family, catch up on all those chores that busy traders don't do during the year. And having given you that advice, I can tell you I'm the first to break it. What I do on holidays is look at charts anyway, because I think they're incredibly interesting. They are to me, at least. Okay, so there's your S&P. Let's go now to gold, which is having a little more interesting action. Let's start with our biggest chart, and this is the 24-day chart, and we'll go now to gold. And as you can see here, you've seen these charts a number of times because I've been showing them to you over the last few weeks. Gold is in a strong established downtrend. It came down to the Danielcode number 1186. It breached that. It rallied back, and it rallied because it hit a 62 time frame, Danielcode time frame, 62 weeks a week. In the Danielcode lexicon, don't forget it's 6 trading days. This is a 24-day chart. And that caused that small rally that you have seen recently. Let's move on to the 12-day chart. And SPX is there. We want GC3. Here he is. This is a little more interesting chart. Again, you've got this well-established rally coming down, broke through the market, broke through one standard deviation, back up to the mean, down to one standard deviation, etc., etc. So when the market breaks one standard deviation, what you do is right-click on the center line, which is the median or mean, and you just adjust your channel to 2. And we allow it to go to 2. This one hasn't quite reached it, but it got support off the red line, the Danielcode 4 seal line, and that's what forced the rally back to the median. Then it came down. It found support of the Danielcode retracement, 1186. Off it went again tried to recover the median, held it for a while. Little rally failed. It's now tracking down, excuse me, below the median. And this time it found support at the same Danielcode red line. That's the 4 seal line and the 62 time cycle, which is what forced the rally. If we look now at the 6-day chart, we're going to see that much more clearly. And here it is. It all looks a bit busy, but I'll simplify it for you very quickly. And we've been tracking this correction along the bottom here since July last year. Every turn has come at a known Danielcode number up into the 66 time cycle, which is times and a half of 44, which is the time cycle number for gold. If you want to know more about that, read the articles under the Articles tab at the Danielcode website. There are two. One's called Masterclass 1, it's about time. The other one is called Masterclass 2, Trading Gold, or Timing Gold rather. We'll show you exactly how these 44 time cycles are arrived at, and they'll tell you where gold is going to turn with a high degree of certainty. Ran down to the Danielcode support number, ran back up to a blue line and a expiring time cycle. These time cycles are accurate to one plus or minus one period. Ran down there. There was a red line there. I've taken it off now. It all got too busy. Rally up into point number 5, and it found resistance at the conjunction of the Danielcode blue line at 1346 and the red line from the fourth seal, and that just sent it diving all the way down. We did have support at this point at one stage on a red line which it lost, and it's now gone down until it found support off the next Danielcode fourth seal line. If you've come to a tutorial, I'll teach you how to draw these lines. Once you know how to do that, you get a very, very strong idea of where markets are and what they'll do. So there it was, and it found the 62 time cycle, expired at the same time. Massive dose of hay fever here today, folks, do forgive me. And off it went, and we got this decent rally, which is now starting to fizzle out. So that's where we are, but it remains the same, that we've had the primary buy signal off this 44 and the 62. We're having a bit of a correction now, but until that low is taken out, we expect this rally to continue, and in the new year I'll have more detailed charts for you, which will tell you exactly where this market is going to go next. Okay, that was that. Let's have a quick look at oil, folks. That's very much in the news, of course. Commentators get terribly excited, and I don't know why. We've been saying this is going to happen for a long time, and I get, here we are. Here we start. This is the 24-day chart, and you've seen this from way up here. Look at this. Look where it's gone to. Exactly into the middle of the intersection. This is another cocked hat. Almost needs one more line to perfect it, but have a look at that. Just broke through the 54, 52. Where did it stop? Exactly at the conjunction of the two Danielcode fourth seal lines, which have been on here, as you know, for months, because you saw it, this chart a long time ago. Quite extraordinary, isn't it, if you know how to do this stuff, just how precise and accurate you can get. So that support there, lots of drama about it, lots of commentary. It's interesting when you look at the chart and compare that with the commentary. I mean, the financial papers at any rate seem to be bleating their hearts out about the poor bloody oil companies, and you know, it's expenses are too much and North Sea oil is going to have to shut down. I could care less. What about the poor consumer? We've been paying through the nose, not you Americans, because your oil doesn't have any tax on it. But we've been paying $8.40, $8.50 a gallon for petroleum, for petrol down here for years and years, and it's just absolute gouging by a government that's avaricious and hungry to extract as much money as it can from its citizens. And unfortunately, New Zealand's just the same. But taxing petrol, which is pretty much a necessity of life, in my view, is morally wrong. I like the American model that it's not something that should be taxed. But of course, Australia is the tax capital of the world. We're taxed on everything, every dollar you spend. You have to pay sales tax, everything except fresh food. Fresh food, everything else has sales tax on it, which adds 10, 12.5, 15% of your New Zealand onto the cost of everything. Consumers bear that. Business charges it and passes it on to the consumer. It's a consumer tax on consumption. So you've got the highest income tax rates in the world, and then the highest sales tax in the world, and the second highest petrol tax in the world. The only place petrol is more expensive is Norway, where, you know, one tank of petrol probably take you around the country 3 times. But Australia is a country about the size of the continental United States, in fact slightly bigger, and when you drive here, you tend to drive very long distances. But anyway, that's my rant for the day. The good news is that it's gone exactly to where we forecast it would go, and from here we should get a bit of a rally. I don't by any means think this is over. I think that we can get another break, but the market got very extended on that last push down, and I expect to have a bit of a rally, and then it will likely run down along this red line and look for further targets below that. So that's what's happened with oil, and you saw this chart probably for the first time a couple of months ago, so you should have known that's where oil was going. Let's have a look what's happening on the 12-day chart. Here's oil, nothing much to see there, same number, 54.42. That's the retracement from this high in May 2011 to the February 2009 low. But interesting how these numbers, these Danielcode proprietary numbers, just keep working these markets over. Let's see what the 6-day chart has to say, and here it is. Well, pretty dramatic, wasn't it? Look how this thing's just dived down, and these are actually different fourth seal lines, but they've done exactly the same thing. They've stopped this market like it was shot. An interesting thing here to notice is, you know, you'll often see this, that the market will just break through the Danielcode numbers. In this case, it was a red retracement number at 54.52, and then rally back, and you say, oh, I was pretty close. Well, that's where you're only seeing part of the story. If you actually knew about these fourth seal lines and how incredibly accurate they are, they work just to the tick, and that's what actually stopped this market and caused the small rally, just a little corrective rally that we're seeing now. So that's where you are for oil. Whoever was asking beforehand, Dave was, I know. Ding, ding, ding. Yeah, he's got it. Okay, so that's where we are with oil. A little rally now. I suspect a little relief rally, and then it'll start to track down these red lines here. But I show you these charts quite often, Dave, so you can really be aware what's happening there. Okay, folks, our next market is DX. We've done S&P, we've done gold, we've done oil. DX, the US dollar index. Let's go back. I don't know if we actually have anything on the big major trend chart. We use the index wherever we can for charting. Here it is. Here's DX. Okay, so what have we got here? We've got a market rallying. Last time we looked at it, here we are. We got our lows where we wanted them. We had our first level of resistance. Didn't quite intersect, did it, with the Danielcode number, which was at 89.57, the major retracement. That stopped the market for the best part of a month. This is a 24-day chart. Each bar is, excuse me, 24 trading days. It stopped it, and now it's progressing upward. So its next target is these old highs here. It's through these, so this is the next high up here. These old highs become targets. It'll be up here, so I guess 93 will be its first target, and then it will start probably to run up this Danielcode fourth seal line. Incidentally, you can subscribe to any of the fourth seal products. We cover 10 or 11 markets with the fourth seal, and you can see these lines and the time cycles updated every week. You don't have to wait for the fortnightly webinars and hope that I happen to get to the charts you're interested in. You're most welcome to subscribe to the fourth seal, and you get an update every Monday with time and price on those markets. And it's an absolute necessity. I don't know how people trade without it. There we are. Let's have a look. We're now looking for DX. There it is. This is the 12-day chart. Same thing. Nothing different to see here. It's just broken through that Danielcode resistance. The next one will be up here at 93. Let's have a look at our 6-day chart. DX is up here. Don't go away, folks. There's some big stuff coming in a minute. I just got to get through these charts for you. Excuse me. Same thing. And note. And Dave. Excuse me. Interest rates. they're going to stay effectively low for a very, very long time, but I'll be happy to put interest rates on the agenda for the next webinar. Folks, do feel free to write me an email with anything you're interested in so I can prepare the right charts for you. Here's our 6th day of DX, and you can see it is facing a 59 time cycle, which will expire in the week January the 14th. So that could come into play as early as January the 6th, and that will likely cause some sort of a reaction, maybe a little top for a while, and I'll update these 4 seal lines for you the next time we meet. Let's have a look here. Let's go back to our major. Our last market we're going to look at, folks, is the Aussie USD, which has just been a huge, huge trade for us. Trend, this is the one we want here. Aussie USD. Let me see on this SPX. There we are. Dave, you can see on the chart now, or you will very soon when it changes. There it is. There's my email, jneedham@thedanielcode.com. If you want me to cover any particular market or give you my views on anything of the nature of markets or the more important things in life, like how to make the perfect Bloody Mary or where to buy the best Australian prawns, anything worthwhile in life, Shift and I are pretty much experts on most of the worthwhile things in life and some of the things that aren't so worthwhile. But if you just drop me an email, give me a little chance to prepare. I have, about 1, 2, 3, 4, 5, 7 computers running all the time, and I don't have all the charts that you guys are interested in already on this computer. So as long as you drop me a line, let me know what you want, I can make sure I have the right chart for you and tell you what's happening. I mean, essentially, the world is stuck in a low-interest environment. QE is, I know that it's been withdrawn at 10 million a month, and that's 85 million a month of American QE that's not happening. Japanese QE is probably even bigger. There's much more QE going on in America than people realize. They just don't call it that now. Europe is carrying out QE sotto voce, which means in a very quiet voice, because Germany said, no, you can't, but it's happening anyway. And as long as all of these states keep pumping up the money supply, we are destined, we're into disaster for savers and investors to have these perennial low interest rate environments. And for those who think they're getting money really, really cheap, interest-free at 0.5% and 1%, I can tell you, you and I aren't getting it and never are. The broker-dealers are, the big boys are, just exactly the ones who don't need it. But none of that has really trickled down to the consumer very much. I know it's better, but inflation, real inflation, is so high to be hardly true. You want to see something that's really rigged, it's how they calculate inflation. It's not really rigged, but they take all the volatility items out of it. Doesn't include petrol prices for our part of the world, doesn't include food prices, and you ask your wife or lady friend or anyone who does the shopping at the groceries, and they will tell you that real inflation is probably running at 14 to 18% a year. So it's all designed to transfer wealth from the consumers to those who are in the elite, the positions of privilege. And I can tell you my politics are slightly to the right of Genghis Khan's, but I can see very clearly that it's a very unjust world. But anyway, we'll have our revenge because we know how to trade and they don't. And as long as you know that, you will prosper. Okay, Aussie USD was coming up, is what we came here for. And here it is. Stephen, you asked about this. And here it is now. This is the 24-day chart. Let me spread this out a little bit. This chart has just been so beautiful. It has responded to every single, we got short, remember guys, way back up in here and forecast this market to fall down onto this Danielcode 4 seal line. And there are more. Don't forget, there's not just one 4 seal line. There are others below that. But this was the first level, the first major target we were looking to We got that break, lots of drama down here, rally back to try and recover the median, what it always does, back down to 1 standard deviation, rally to recover the median, then a push up to 1 standard deviation above the mean, and then the collapse. And look where it's gone. Here we have down here, we have the Danielcode red line. It's just breaking through that on the previous month. This is the 24-day chart. This bar ended on December the 18th. It closed right on the Danielcode red line. You can just see half the close underneath it. Now in the next couple of days it's pushed a tad lower. It's now getting support at 80.71, which is the Danielcode retracement that I told you months ago was its minimum target. I suspect this support is so strong we get a bit of a rally back to the median, and then we get down into this area. Now the Australian Reserve Bank is saying that it prefers a target around 75 cents. Well, it won't go there. Markets always overshoot on the downside or the upside. It's more likely this thing will hit at least 73, and they may well stabilize for a while around 75. This big fall in the Aussie dollar, of course, is being driven by the huge, massive drop in iron ore, which Australia's major exports. And don't forget that the oil price has a very, very strong effect on the price of natural gas. And Australia's had a multi-decade investment and development program of natural gas plants in Queensland, more importantly in Western Australia. Massive, massive oil fields over there just offshore. And Australia is in fact about just on the verge of becoming the biggest oil exporter in the world. And oil prices, I don't say they're collapsing, I say they're getting back to something reasonable, and they should be another $20 lower at least. But getting back to something more reasonable has cut about $18 billion a year out of the government's revenue for what it gets for its mineral resources tax, which is a joke, and it's just a gift to Gina Reinhardt and co. But anyway, we get something out of them. Doesn't help us. The government just pisses it down the drain like all governments all the time. All right, there we are for there. What was we on there, folks? I get a bit carried away with some of this stuff. Let's go to the 12 to see what Aussie USD is doing there. Same thing, running down its trend line, just broken, absolute support at 80.71. Will force some little sort of a rally. Chip, hi mate. God, you can type. You want to see Chip's post here. Season's greetings. Thank you. Without the cold, rain and snow, can't say it's possible. Just got off the ice hockey practice with the kids. Queensland had some real ice hockey being played down there. And if I've ever been taken, I stay away from anything, Carl, mate. In a game, no tackling goes on. Shift and I wouldn't find it entertaining. We're rugby people. Chip, Shift actually is an Aussie rules guy from West Australia, to tell you the truth, but he's pretends he's a Sydney native, and he's pretty good on the rugby. He's certainly keen on it. Great sportsman, Shift. He follows all the sports. Anyway, glad you're enjoying it all, and what a great post. James, Euro USD, same thing. If you drop me a line, and Euro JPY, whatever you want, drop me a line so I can get the charts prepared and up for you on this computer for the next webinar. Okay, here's 6. Don't go away, though, because you've got very exciting stuff coming up. Aussie USD, here we are. And here it is, same thing, just breaking through that channel there. Right out, this is a Danielcode retracement you saw. Okay, folks, excuse me, an hour is up. That's the end of the charts. But what I want to show you is your Christmas presents, which will be available to pick up after New Year. We'll be releasing this very early in the new year, hopefully. And this is Fractal Pro, which you've heard me talk about a great deal. And I wanted to just, if you'll grant me another 10 or 15 minutes, give you a really quick picture of what this is and how it works. And what Fractal Pro is, it started off as Project X 4 or 5 years ago. It's taken me all that time to get it to this stage where we're now going to be able to deliver it to you as a complete auto trade program through a new program Trade Navigator has called Trade Clone. And what it'll do, Fractal Pro is what we call it. A lot of you know from Fractal Text, this is the next step on from that. And what this does, it in Trade Clone, which runs in Trade Navigator, it creates the signal, it places the trades, it puts on an initial stop, It determines the optimum first target, which is big, usually $200 to $2,000, depending on the market. And when it gets to that target, it switches from a fixed stop to a trailing stop. And all of that is done automatically, and it will then exit when it's told to by the program or when it gets the reversal signal. And I wanted to show you just really briefly how we do it, but perhaps before I do that, I should show you the results, because Terry has just finished the back testing of this. This is, Jerry, you'll be interested in this. This is a hypothetical, of course. This is back testing done on a computer on a trading program that's been written for us by our partners. And you can see there are 13 markets that we finished testing on. This spreadsheet is the testing run by the computers from January the 2nd this year up to, I've got in there the 22nd. I think it's the 19th. It's actually the 19th. I don't know how that date 22nd got on. I put it on. And you can see the markets that we finished testing on. We've got oil, lean hogs, feeder cattle, live cattle, NASDAQ, Germany's DAX, heating oil, coffee, the S&P 400, that's the S&P mid-sized contract, soybean, sugar, palladium, and gasoline. We also have corn, copper, Russell Gold, S&P, the ES, the S&P 500 Mini, and AP, which is the Australian Share Price Index. We haven't finished testing on that, but this testing run came from Terry only about 3 hours ago. He finished it, and I wanted to share it with you as quickly as I can. And we're almost 12 months, not quite, say 11 and a half months, and this line through here with the that I've highlighted, those are the returns that we've got. If you look at the next line down here, you can see the margins, and you can see some of these markets have quite small margins. Excuse me, feeder cattle, the margin's only $1,600. Live cattle, the margin's only $1,300. And these markets have made, feeder cattle's made 1,700% on margin. Live cattle's made 900% on margin. And you can see down the bottom here, this is the return on each of these markets for 11 and a half months. And it's quite extraordinary. Our total margin for the 12 markets, we take out the DAX. We actually treat the DAX separately because, you know, it's such a big contract with 22,000 odd margin that very few people trade it, and it can distort the results. It doesn't actually, but people think it does. So we take that out for the purpose of comparison, and you can see from here that the total margin required to trade all of these markets, all 12 of them, not the DAX. You don't have to. You can trade one if you want to, or two, or three. If you want to trade more, I'll do you a great deal on them. And the total margin there is $65,000 required, and it has returned in the 11 and a half months to date, $363,000. That's 557% on margin. If you add in the DAX, here is the DAX, then X the DAX, that includes the DAX. You X the DAX, you only require a margin of 40,000, and the return 253,000, or 619% on margin without the DAX. Now, we've seen drawdowns. The battle in this has been to get this thing stable enough that the drawdowns are under control. We do see drawdowns occasionally approaching the margin, so you do need twice margin in your account to trade any of these markets on Fractal Pro. Next year, we're going to release a day trading version of this, which will have entirely different settings. It'll run much faster. And for you guys who are interested in day trading futures, Jerry will offer you very, very reduced margins for day traders. It's only about 10 to 12% of the overnight margin, so you can trade you know, a lot more contracts. And there are some people who just don't like holding contracts overnight. So that's the figures we have on that, folks, and it's getting to be a pretty reasonable sample now. That's almost a year. It's better than anything we've seen before. It is the best in the world that I'm aware of, and we can improve it. There's a few here I have notes against EMD, oil, PA3, which is palladium. We can make those better. And in the few minutes of indulgence you've granted me, I hope, let me show you what happens here and how we get this stuff. What you're seeing now is a spreadsheet of the first run. It'll change momentarily. Okay, you've got it there now. This is a spreadsheet where what we're doing is we're taking an operating range over a specified period. It can be anything from 1 to 10 days back, and we're looking for the optimum operating range. And then with Fractal, we're cutting that up into fractals or parts of the range, and we can cut it up from anything to 1 to 50. On this particular, this is a test run of HC3. This is copper, and you can see there's 122 combinations we've tested here, and this tells us this is only a small test. This is only a 2-month test. But this is showing us what happens with the different fractals, and you can see that the best combination gave you 4,000, and the worst combination lost you nearly 10,000. So there's a huge amount of volatility in making these choices. And what we're doing is we're actually manipulating volatility. You're trading volatility, which is what we want all the time. But where we cut these operating ranges up into smaller fractals, you talk of a fractal of 20, 30, 40, that's 1/20th, 1/30th, 1/40th of the operating range, which can be anything from 2 to 10 bars. You're getting down to some quite small numbers. And then once you've done that, it looks to the Fractal program, it seems that there's volatility even when we're getting quite small movement in markets, if you can get your head around that. So we'll show you more about that later. The next thing I want to show you is once we've set on what we want to do with it, we then run what's called the optimizer program. Chip, this is what you wanted to see. And what we do then is this is a program that we run for each of these markets. This test is 1,452 different variables on the same market with the same setting. Once we've decided on the setting, we then run this optimizer. And I've cut this down to make it brief enough for you to see. Normally it runs 3,600 different tests, and what it's testing for is the different initial stop loss. Don't use these numbers, these are just code for settings that we use, but they're different stop losses. These are the targets at which it will switch from a fixed stop to a moving stop. This again is code for the second part of the stop loss that becomes a fixed stop, and this L4 is another piece of code that tells us whether we want the market to trade both ways or one way. So we can then take this. Remember, this is only one setting. We had 122 on this one market to examine. This is gasoline, this market. And we started off, we looked at this and we've optimized it for maximum drawdown, and we can see that over this is a 1-year period. If we wanted the smallest drawdown, it would return us $20,000 for the year. But we may not want that. We may want to optimize it for the best average trade. And if we go and look at the best average trade, our net profit jumps up to $61,000. We may want to look at it for the best average win. And if we do that, we're at $44,000. We may want to look at the win percent. And we can see the very best is 59. And if we get a higher win percent, we lose almost half of our potential profits. So interestingly, against everything that seemed logical that one would think, we're not looking for the best winning percentage. In fact, 37 to about 45% win is what gives you the best dollar value. and we're in this business for the dollars. So we have the option, and you can see, let me just scroll this thing down so you can see that every possible combination has been tested, and with some of the markets we'll test this move out before we switch to a trailing stop, way out to $4,000. So we examine all sorts of things. It's very, very complex, as you can see, and very good, and I don't think it's ever been done before. In fact, I know it hasn't, because I invented Fractal, and we're getting extraordinary results we're very thrilled about. And you can see if we simply optimize for net profit, the very best setting would have got us 61,500. In fact, in the year to date, we've got 59,500. So this here was the setting, obviously, that I chose, which wasn't far from the best. I don't say I can do that every time, but I can certainly do it better than anyone else. So that's what's coming up, folks. We're going to have this for you for release very early in the new year. You'll be able to run your free trials on the normal standard Trade Navigator program. Everything from Trade Navigator, if you don't already have it, can now be leased. You'll be able to lease it. It needs Platinum to run it. You'll be able to lease that. You can lease the program, etc., etc. We'll tell you more about it. There are some costs involved because Trade Navigator have their fees as well as our fees. But the point is, these returns are so fabulous, I don't think that's going to concern you. Well, thank you for your indulgence, folks. We've gone 15 minutes over. Let me see if there's anything vital here that I need to answer before we go. Yes, Dave, DC is great for binary options. It works absolutely fine. Jerry knows a lot about that. You could talk to him about it. Blah, blah, blah. There's not shift, we know. Your red light's on, restarted. Audio is good. Gasoline is taxed in the US. Jay David has left. Geez, you think, mate? It's taxed at less than 3 cents a state tax. I mean, we have federal taxes here of double, absolutely double, ridiculous. Okay. I think that's all, folks. Thank you very much for your best wishes. Hey, Pete, how are you, mate, over there? I hope you're still building your secret devices and that they're working powerfully and great for you. Lovely to hear from you. Wish I was over there in New Zealand. I'd be down for a nice beer with you. Anyway, all the best, folks, to everyone. Thank you for your support this year. It's been wonderful. Next year is just going to be bigger and better. Marcel, thank you, my friend. Special wishes to you for Christmas. It's cold there, so keep warm and look after yourself. But thank you, everyone, for your support over the year. We sincerely wish you a wonderful Christmas, a chance to relax, refresh, because next year is going to be hectic. We're going to get this Fractal Pro going at last and nail them to the wall. It'll be wonderful. So thank you. Happy Christmas. And Arizona, wonderful. Yes. Thanks, Rob. And we'll certainly enjoy it all. Okay, folks, I look forward to seeing you. We'll schedule another webinar really early in the new year. And do give my regards and blessings to all of your families. Have a peaceful and very blessed Christmas holiday. Bye-bye.